Good afternoon, good morning, good evening, wherever you may be from. We're going to shake it up this time. I'm going to say from Chad to Canada.
Wow.
From? Go.
Djibouti to Dubai.
Nice.
From Egypt to Ecuador.
Ooh,
Wow.
okay. Welcome to you all. Thank you for joining us. And today we are going to unlock some secrets on property investment. I'm not sure that they're secrets.
No.
Lesser known.
Lesser known. And before we start, the first thing we do need to say, sorry about the boring slide, but anything you hear today must not be construed as advice. We encourage you to have a one-on-one session with one of us, and we can carry on the conversation. But the webinar is just that's our disclaimer. So we'll be moving on to much more interesting slides, but we do have to put that up at the start.
Absolutely. Okay, so I will move on from that.
Perfect. Let's get it up.
Our agenda today. So we're going to take you through more on Holborn assets and Holborn property, why we consider property investment in the first place, some market insights, so some of our trends and hotspots at the moment, very few of them. We wouldn't have time to go through all. And then really all of it encompasses your financial freedom roadmap and long-term planning. And we'll go to a Q&A session.
If we have time.
If we have time. If you do have a question that comes to your mind, please just pop it through, and we will try to address them throughout the webinar. If not, then we will definitely love to hear from you.
Yeah.
And we can address them that way. Alrighty, so I'm going to ask Mr. Adrian Bradley to introduce himself.
Wow. First thing is we need a new picture. That one's very old. But I look a lot younger. Thanks, Des. I'm a wealth manager, obviously a colleague of yours. I've been with Holborn, and incredibly, my 5-year anniversary has just passed about 3 weeks ago. I'm a holistic planner, financial planner, tax specialist, property. You know, essentially, I've been in the game for about 20 years, helping clients doing investments, doing their planning, and looking after them and their families, either to create wealth, to protect the wealth, and those type of things. So that's me. Won't get much more. I'm a certified financial planner, so I have a qualification as well, and that's me.
And he's awesome. There we go.
Thanks.
Oh, okay. I am a born and bred Zimbabwean. So I'm sure a lot of you will actually know that. I post quite a lot of stuff on my LinkedIn. I'm very passionate about financial planning and wealth management in a holistic way because of everything that Zimbabwe's been through as a country and for its citizens. So I've been in Mauritius actually for 6 years now, I think.
Sure.
Getting a bit boring.
Don't say that. Maybe they want to come visit Mauritius.
Come visit, please. But yeah, I think that's me. And I'm going to go to Mr. Barclay.
Fantastic. I'm sure you've all been looking forward to hear about me.
Yes.
So my name is Lloyd Barclay, originally from Cape Town, South Africa. I've now been in Mauritius also for about 6 years. And I've been helping clients primarily all across Africa with regards to their long-term financial planning and wealth management needs. Studied at Stellenbosch University, been with Holborn now for 9 months, so I've been here the shortest amount of time, but thoroughly enjoying it and can't wait to tell you all more about the property opportunities.
Yay! Okay, stay with us, guys. We're going to get a lot more interesting now. All right. So, Holborn, you'll see that we recently celebrated our 25-year anniversary. And it really is about the right money, right place, at the right time. And we think that's with us. I'll tell you why. Okay. So, the actual Holborn Assets as a business was founded in 1998. And it's very much family owned and family run, right from the top. We are the second largest globally. clients in over 30 countries, 2.5 billion assets under management or administration rather. For
US
that
dollars,
one.
I have to say that. US dollars.
Not rand, not Zim dollars.
Not Zim dollars.
Not Zim dollars. Then I will say to you, well, okay, I should probably have changed that to over 30,000. Sorry, guys.
Change it so quickly.
It does, it really does. And 13, well, offices in 13 countries physically. So just take you through a few of our latest awards, and why they matter. So our size, because of the amount of assets that we have under management, because of our reach globally, that really is a benefit because we get to pick and choose the institutions, developers that we work with. We get to have preferential rates and all of that for our clients.
Institutional buying.
Institutional buying power, yeah. Our independence is awesome because we're not just selling you stuff that is only like this. We are, again, picking and choosing based on merit to our clients. Our service,
Yep.
we're all big on service.
You can see from all the awards.
Yeah, I think almost all
Every
of
year.
every year, yeah,
Consistent ones.
consistent. Our safety and security, your safety and security of utmost importance to us, and our education. Okay. So
Right, let's get stuck into it.
I'm going to throw you under the bus, Mr. Barclay.
Where to start?
Why property investment? Well, I can't think of a reason why anyone would want to buy property. Now, I'm sure most people know that property is one of those things that everybody wants. Since we're children, our parents always tell us to get on the housing market.
Yeah.
So that's one of the obvious reasons. And we all like an asset that we can see and touch and feel, right?
Yeah.
Bricks and mortar.
Mm.
But there's more to it to that, right? So first reason being stability and tangibility.
Yeah.
A house you can see, right? If it's a house, apartment, any other kind of fixed asset, it's not a asset on the stock exchange. It's something that's actually tangible. Right, income generation, as it says, right, you can bring in income either through tenants or by appreciating capital, right, over long term. Usually not always, but property does tend to increase in value, if I'm not mistaken, right?
I think of the long term, which is what we talk
Especially in the
about.
long term.
You,
I believe it's only Japan where property
Yeah.
tends to depreciate. It's fine.
Only Japan? I think Zimbabwe is
Zimbabwe.
somewhere on that
Yeah.
list as well.
Well, that's not on purpose. Right? Diversification, of course, don't put all your eggs in one basket. It's
Yeah.
always a good idea to diversify, not just in means of asset class, but by other means, for example, location.
Yeah.
Right. And then, of course, there's always tax advantages if you manage your tax properly. And then, of course, it helps to hedge against inflation, that terrible villain that attacks us all over time.
Yeah.
Right.
Okay, folks. So let us focus on some of our trends and our hotspots. So on this little map of the UK, you'll notice that we're going to focus a little bit here today. And the reason for that, I'll give you a little bit of background. There is a huge housing shortage in the UK. You know, they
can't build them fast enough.
can't build them fast enough. Literally, they should be building about 340,000 homes a year. If they are hitting 250, they've done amazingly that year. So there's still a shortage. And that is one of the reasons why the UK is so strong with its property outlook.
Yeah.
So you'll see a couple of pins on there. We won't go into all of those today. We'll just focus on our sort of top few in our arsenal. And that brings us to Birmingham, and we can hear Mr. Bradley.
Me, talk about Birmingham.
Yes.
Yeah, can you just go back one?
Sure.
I think it's important to just talk about the pins. So London's down in the southeast. We haven't drawn it on here, but one of the big plays from a property perspective is you always want to be investing where infrastructure spend is happening, where the government is spending money to uplift either a city or an area, or the infrastructure spend to get people moving around to different areas.
Yeah.
And a large project that has been kicked off is the high-speed rail. They've already started building, and it'll complete between those two pins down in the southwest. The one in the middle is Birmingham, essentially in the middle of England. And then another hotspot will be a little bit slightly up, which is Manchester, which we'll talk about later. But you can go forward now for me, thanks. Des. And essentially, from a Birmingham perspective, there's lots of positive things from a property investing perspective and why we like it as advisors. I talked about the fact that infrastructure spend. I think Birmingham themselves, if you watched Peaky Blinders, that is what Birmingham was like many years ago. And essentially, funnily enough, one of the projects that we're talking about today is in the old jewelry quarter. And it's still a very vibrant place to have property, very trendy. And it's called the jewelry quarter because they used to assemble all the jewelry in the UK in the area. But from an infrastructure spend perspective, the Birmingham City Council are very focused on spending money. The high-speed rail arrives in 2026, so it's not far away. The opportunity to invest now for us as financial advisors is really, Birmingham really ticks all the boxes from that perspective. They have good growth rates. They've got good growth rates previously. They achieve decent rentals. And then the other one from an investment perspective, 90% is to buy to let. And we want to make sure that a client will be able to let the property once it's completed. Their void rates are very, very low, and the supply and demand in Birmingham itself, and I think we touch on it later, is very good. So I won't steal the thunder from that slide.
You've actually done quite a bit there.
A couple of slides.
I was just going to say, and to confirm, the Peaky Blinders aren't in the area anymore.
No, they don't exist anymore. And I think there's a lot of folk. That's a lot of Hollywood on that. So don't worry, but yes. The Meat District and those places are around. The Jewelry Quarter, so the suburbs that the Peaky Blinders rushed around in are around, but the Peaky Blinders themselves don't exist.
Okay, cool. So Adrian's touched on the regeneration and the HS2. I think, guys, I think that you will see a poll has come up on your screens. Oh no.
Yep. Please fill it in.
Great, yeah.
Let us know. And
it's only 2 questions.
Yeah. Oh no, we might have the wrong poll.
Yes,
so we'll kill that one off.
I think we put the wrong poll up, guys.
Apologies for that.
Well, feel free to
Ignore us. Ignore us.
Answer that one if you want to.
Okay. Okay, cool.
You can kill it off. Perfect.
So rising population. So the goal is the forecast is predicted to hit 1.24 million by 2030.
Yeah, it's the second biggest city outside London in the UK. So essentially, has a lot of population growth coming. The next one there talked about tenant demand. The two next points are case in point. They have a large student population. And they are one of the highest with Manchester. Birmingham is there as well in retaining graduates. They have a lot of Fortune 500 companies there. Some head offices have moved to Birmingham. And there's lots of demand from a tenant perspective.
Okay, dokes. And I will throw it over to Mr. Barclay for our Sloane Court.
Is he doing Sloane Court? Is he doing Manchester?
I'm not sure. I think I've been thrown Sloane Court cells. So Sloane Court, community of 71 homes. Copperworks comprises a range of residence, apartments, duplexes and townhouses. Some are new build, others form part of the restoration of the centrepiece. The Grade 2 listed former brassworks dating back to 1854.
That's
so quite a lot of
so
history
cool.
there, but you can see they've done it up very nicely inside. What a beautiful building. So let's go on to the next slide there. You can see another couple of shots of the interior there. You've got a couple of different options there. You can make a reservation deposit of £2,000 and then choose between 1, 2 and 3 bed, ranging from £255,000 to £470,000. Right. It's also in the jewelry quarter. Is that right?
Yeah. It's a great development.
Close to the other one.
Yeah.
very close to the other one. I think it's just behind one of the ones that we
South
went
side,
to
yeah.
previous.
No, south of the Chinese Quarter, I think it
The
was.
south side's Chinese.
So I can
Yeah.
just piggyback off of everything that Adrian said about the
Yeah. No, the Jewelry Quarter is a great suburb, and very, very, very trendy. Lots of pubs, restaurants, lots of young people, very,
Very
very
lifestyle focused,
Yeah.
artistic.
100%. And then
etc.
walking distance to almost everything in Birmingham. That's really
Yeah.
what's the big plus. As you
Fantastic.
see, there are 10-minute walk to the Birmingham City Centre.
Right,
Okay,
80% mortgage, very impressive,
Yeah.
and completing quite soon in 2025. So
Yeah.
get started.
With an estimated rental yield on that one of 5.5%, circa 5.5.
Yeah, it's a release. I've actually sold a unit to a client in Sloane Court, so it's the final release in the Copperworks area of 2 other builds that are already complete. So strong track record by the developer in the area and that actual space.
Yeah.
And it's really good project.
Okay, I think that I'll just pop through here.
Southside Residence, Birmingham. Okay, so we're still in Birmingham.
Yeah.
I see they've got 1 and 2 bedroom apartments available. Anything else to mention about this property? Maybe we want
Yeah, I think you want me to jump in on the next one?
I can jump in on
Yeah.
here. Okay, so this one
experience,
is again in Birmingham, but it's in the Chinese Quarter, so just a little bit over from the Jewelry Quarter. And this is one of our more sort of unique projects. And the reason for that is because you don't have to have a huge lump sum as a deposit.
Yeah.
What would be expected would be your 5% reservation fee plus 995 sterling or pound in your legals.
Yeah.
And then the rest of your 30% deposit is paid over 30 monthly installments. So essentially, you'd be looking at £2,509.95. Put that in dollars, I'd say just over 3,100, maybe 3,200. Completion set for Q4 2026. So it does give that sort of time frame to really work for it, work at it. And then
you lock the price in now, which is the really good thing.
Yeah, very much so. And then on completion, you have that 65% loan to value.
Yeah.
Estimated yield of, I think, 8%. But that would be gross, I'm quite sure.
Yeah.
But I
That's
wanted to just sort of ask Lloyd to help us, because I didn't go through this earlier, which I'm a little bit shocked at. What would you say, Lloydie, is the benefit of a mortgage?
Right. Well, I suppose that comes into leveraging, right?
Absolutely.
So for those of us who don't know what that means, essentially leverage is using borrowed capital, i.e. debt, to finance a portion of your purchase property, right?
Yep.
So for example, taking a loan, you put a deposit down, right? For example, 30%.
Yep.
And then the loan is utilized to pay off the other 60%. Now, there's a couple of reasons to do that, because I'm sure you're all wondering, well, debt is bad, right? I should never get into debt. But there's actually a range of advantages to using debt, and actually that comes down to leveraging. So, for example, if you purchase a property with £100,000, right? Cash, great, you've got that, and it will increase in value over time. But what if you decide to use leveraging and you purchase a property with £300,000 and you're going to put down 100,000, right? Over time, that property value is going to keep going up, and you're going to have a property worth a lot more than what you could have had, right? Other reasons include potentially higher returns, right? There also can be tax benefits to leveraging. And of course, you can also diversify. Perhaps you'd like to purchase multiple properties instead of one in different areas, right?
Yeah.
Have I gone through all of them? Can you think of any others?
No, that's pretty much it.
No,
Very
I
powerful.
think that's a great way to describe it. Okay, so I touched on the fact that this is in the heart of the Chinese Quarter. So it's a pre-infrastructure investment area of the B5 postcode. So that's where the metro is. The tramline plans are in progress, and as we said, the high-speed rail, which is actually quite a game changer because it takes that traffic and that sort of time spent commuting down significantly. Touching on Peaky Blinders again, Stephen Knight, the creator of Peaky Blinders, announced a new 36-acre media village in Digbeth, which is, I think, 7 minutes walk away from the Chinese Quarter. And yeah, the fun fact for you, Birmingham has the most Michelin-starred restaurants in any other UK city outside of London.
You've got me there. I'm honest.
Look, I think.
No, go ahead.
Carry on.
Sorry.
Yeah. You know, I think from a leveraging perspective, Lloyd talked about that if you have the lump sum, but I like this project for those clients of mine, and I've just recently had one. We were discussing some savings that they had, and they only had about 40,000 pounds, about, what's that going to be, 40,000 pounds. And we were, you know, they like property, like it as an asset class. I also like it as an asset class, and really Southside just ticks all the boxes because that 40,000 pounds is easy to work with and get a fabulous property. I think we're going to get one for about 200, the late 200s.
Yeah.
200,000 pounds on that payment plan that Des talked about. I think we, you know, I can't emphasize enough. We might have gone past that point quite quickly, but you essentially can get onto the property ladder for a much smaller sum than the 100, 150, 200,000 pound. And you actually don't even need the 40,000. You only need 5%.
Yeah.
So you know, if we did a 300,000 property, you only need 5%, which is, what's that, 15,000 pounds plus 95 for legals, and then in your cash flow, as Des pointed out, probably around about the $3,000 or the £2,500 a month mark.
Yeah.
And really brings something like this fabulous development, brings it into a lot more people's affordability.
Yeah, definitely.
Affordability.
And I think in the long term, it is a brilliant investment.
Yeah.
I've also just had a client take a Smithfield, and it is just purely that affordability level. And it really opens up for people who do love property, want to invest in property, looking to diversify.
Right, makes it accessible.
Well, it's like we call it like a regular saver, but you're getting a property. You know, a regular saver if you're doing an investment in, you know, trying to invest in the stock market or building something like that.
Yeah.
You know,
real estate.
Yeah, you're just investing and growing real estate, and it's yours.
Yeah.
That's a good get.
Okay, cool. Lloyd, I'll ask you to take this slide, please.
Manchester, all right. I'll do my best, Des. I'll tell you that. All right. So we're looking at average property prices of £250,000, right? Average monthly rents of 1,515, and average rental yields of 7.2%. That's not too shabby, right? And then below that we can see some price growth predictions. You've got there for price growth and rental growth, 19 and then 21%. Not too shabby at all. Let's move on to the next slide and talk about that, shall we? Right, so Manchester, as Adrian I think mentioned earlier, Birmingham is one of the largest, but Manchester is the largest economy outside of London. It's seen some incredible growth, especially in technology and digital sectors, which is lovely to see. I suppose it's almost like the Silicon Valley of the UK.
Very much.
Right, 80 members of the FTSE 100 have a presence there.
Yeah.
So
the BBC moved their entire staff there, 1,500 staff from London.
That tells you something, right? Also, we've been talking a lot about high-speed rails. You can see they've also got links to all different parts of the UK from Manchester, a very strong economy, and it's becoming an increasingly popular choice for professionals, right?
Okay, sorry.
I think it's...
Do you want me to go back?
No.
What else can you tell us about Manchester?
Is it me on Falcon?
Yeah, you take Falcon.
And I can do the other points, So, yeah, I think from a Manchester perspective, just to carry on with what Lloyd said, they've also got, I think it's the largest airport or, you know, direct links to, I know Emirates fly there. I think Qatar flies there. So, very, very busy city. And again, I'm going to go back to my first point around property. Infrastructure spend and infrastructure development is something that we look for as an investment advisors. And in Manchester, it ticks that box as well. Falcon and Falcon Red Bank, I like this particular development because the Manchester City Council are directly involved. And when I say directly involved, what they've done is with the owners of the Falcon Red Bank property space or the development, it's one property developer. So that's really, really key, because what happens in some instances, it may be that an area has been designated for new builds, and you have then multiple property developers acting in the same space, and it does become a little bit chaotic with different releases, different things that are happening in that area. But this particular area I really like. It's been designated by the Manchester City Council. There's only one property developer that's going to be releasing developments in this area. It's going to be the Hyde Park of Manchester. It's going to be the largest green space within the Manchester City environs, and the Falcon project itself is absolutely world class. So I think it might be on another slide later, but there's a concierge service.
I just wanted to show them the green space. How pretty!
It's brilliant. And actually, the pictures don't do it justice. What they are going to have is really a large enough space, pretty much modeled on either Hyde Park or in New York, like Central Park, where there is a development not allowed and a lot of green space. The development itself has these green spaces in between it, but just close to the Red Bank, and it's the new City River Park that they're calling it. It really is going to be world class. So from Falcon Redbridge, the Falcon project, I really like it. I think a mix of 1 and 2 beds. Their pricing is good. The demand for property in Manchester itself, we have no problem with tenanting developments as they become available. This is the first block that will be released. And again, the new releases that come down the line in 2025, 2026. Again, what we like as investors, investment advisors, is that that next project is by the same developer. And the developer understands the value of property increasing and knows that property does increase. So what I'm saying to my one client is looking at this now. Essentially, when you buy off plan, you lock in the price now. And we know already that in the next year to year and a half, JDL, the developers, are going to be releasing other blocks, and they are already targeted it with between a 5% and 7% across the next 2 years. So you almost guaranteed that return. We don't buy to try and just make an instant return, but theoretically that's what's happening. So it's a great project. Concierge service, co-working space. Really great bar and deck. It's going to be really, really good. Really for young urban professionals, world class. And these, gym, concierge desk, you can see up top left there, and then again a deck with I don't know if one of the picture right in the beginning sort of showed it sticking out, but it's going to have views across Manchester. It's beautiful. And then also with the developer, a really, really good payment plan. So the 10-10-80 down there is just sort of 10% deposit, 10% after exchange, and then only 80% on completion. So also again helps from a cash flow perspective for clients.
Adrian, for those of our listeners who are perhaps new to property investment, what do you mean by exchange?
Yes. We always just talk like people like that. So exchange essentially is just the exchange of contracts. That's where you become the legal owner of the property. So if we roll it forward, that's in simple terms, it's where your lawyer and the developer's lawyer talk to each other, and they go through the legal process of transferring that property into your name. So in simplistic terms, that's what it is. And the generic term we call is exchange, and it is based on that really basic principle. We exchange one contract with the developer, the developer's lawyers and your lawyer exchange contracts, and that's where it comes from. And it's probably about 6 to 8 weeks timing. So the 10% deposit is now a reservation fee and a 10% deposit within 2 weeks of the reservation, and then 6 to 8 weeks later, depending on the paperwork, a further 10% on the exchange of those contracts once you become the legal owner. And then, as we said, they're only 80% in another early 3 years, 2 to 3 years time. And the yields, yeah, look, the 67% yield, I'm also very comfortable they're going to be able to achieve that. We're getting that in Manchester now.
Definitely.
I always like to be conservative, so that's the low end. I think we'll get better than that.
Yeah.
But we do all our projections conservatively.
Yeah.
For you, as a client, because we don't like to project anything that may not be achievable, and I really feel 6-7% is going to be pretty simple.
Totally.
Fantastic.
Definitely. Okay. I feel a little bit like we've
been
not
left out.
heard your voice.
Someone else's voice to you now.
We've not heard your voice. I wanted to sort of throw a round out there. I kind of had a thought when you were speaking, Adrian, about your lawyer and the developer's lawyer. And the thing is, we deal with that, don't we?
Yeah.
We'll help you.
Take
You
care
know,
of it all.
We'll take care of it all.
End-to-end service, as they call it.
Yeah.
We'll even find the tenant.
Yeah.
Yeah.
And
To go and advertise looking for a tenant or
yeah.
And
No,
management of it after that.
yeah, so no 3 a.m. phone calls going, oh, the
Yeah.
pipes burst.
Yeah.
What are we gonna do?
we can't help you choose the furniture back though. You have to do that yourself.
Yeah, exactly.
All right, I will take Derby. I think I quite like this one. I know probably quite a few of you are looking at that rental yield and thinking, oh, but the others are a lot more exciting. But if you're having a look at the sort of price growth predictions and the rental growth predictions, it's a winner. And I'll show you exactly why. So Derby is essentially smack bang in the middle of the north and south, okay? 17 universities, all within an hour's travel, has the biggest rail city in Europe, okay? And big names like Rolls-Royce, Toyota, right there in Derby, okay? Home to innovators and thought leaders since the beginning of the Industrial Revolution. And again, businesses have always recognized really unique strengths and the potential of the UK's most central city. Again, this is where, you know, those infrastructure projects come into play because of the fact that there is the Derby City Centre master plan. They're wanting to revolutionize it. I mean, the
Infrastructure spend.
huge infrastructure
That's what we
spend.
look for.
3.5 billion investment,
Yeah.
4,000 job opportunities, 1,900 new homes. And the thing is, again, you've got young professionals who are all sort of staying within that area after leaving university. Okay, so this is a particular favorite of mine.
Mm-hmm.
I think it's the old town sort of restoration of Osmaston Mill.
I love.
historic.
Yeah, I just think it's
I
so
love
stunning.
refurbs. It's the old mill.
Brilliant.
I love
Brilliant.
it.
Facebook.
Yeah.
Exactly. Okay, so very traditional building, lots of character, but very new on the inside, as you can see. All right. So direct access to the East Midlands. Again, we're seeing really good growth and sort of projections over the next few years. Actually, there's a stat there, if you can see, 12,600 growth in population in 10 years between 2011 and 2021. And they're expecting that to go to 100,000 by 2043.
Yeah.
Okay. So Osmaston Mill, or the Mill, as we're calling it, 6 minutes to Rolls-Royce HQ, Royal Derby Hospital, 8 minutes away, Bombardier, Toyota, all employing over 45,000 professionals. Again, high quality, well-paid tenants. Okay. And it's actually been noted the fastest growing economy in the UK. So that's kind of why I like it.
Yeah.
Again, this is one of our lovely specials where you don't have to have that large lump sum.
Great.
8 to 10% of the purchase price as a reservation, plus your £995 in legal fees. And then the balance of the another 20% deposit paid over the 15-month installments.
Not a-
You know, originally when this was released, I think we did see that it was very much on the lower end, but you can see that it's still quite low, with only 15 months remaining.
Yeah.
And your monthly sort of contribution being £2,066. That's brilliant.
It's a very accessible option.
Yeah.
I forgot that it was there. So that client that I talked about, I better phone them up. I'll take one here and one in Southside because we've got about 5,000 to play with.
Nice.
Not a bad business.
Yeah.
Okay. So I think what I would like to do now, I'd like to
Open up the table for questions.
Yeah.
open up the table to questions. Okay,
We can question each other if they're not in the Q&A.
there is one here.
Okay.
What other locations do we have access to? Lloyd, do you want to take that one?
Well, we did have the map at the beginning, if you're asking about other locations in the UK. Otherwise, correct me if I'm wrong, we have some options in Dubai.
Yep.
Yeah.
And, what was it?
Germany,
But Germany, of course.
Dubai.
Was it Spain or Portugal?
Portugal,
Spain.
Right.
Spain.
So quite a wide range of opportunities. A lot of people ask me about South Africa. Unfortunately, nothing in South Africa. It's mainly Europe, I would say.
Yeah.
And there's also another question about Mauritius. Unfortunately, you know, we don't offer any property options in Mauritius.
But there is a reason for that.
There's a reason for that, which I'm not aware of.
He knows the reason.
No, I do.
Adrian.
So essentially,
Yeah, it has.
Adrian, you go for it.
the loaning to foreigners is a tricky one.
Yeah, there's no
So-
mortgage options for foreigners.
Yeah.
Well, they are, but it gets quite complicated.
Yeah.
We find that the options we're offering are a lot more accessible and
Yeah.
it's not complex.
Okay, do we accept financial
I
instruments?
think the question here is, I'm going to guess, will you take crypto? Yes, we do, but not in the UK. Dubai, they'll take crypto.
Yeah.
So,
Yeah.
Dubai,
Penny,
actually,
we can get hold of you. If you're interested in Dubai, we'll sort that out. And yes, they take crypto property transactions.
and I
And
think-
as a bonus, you get the visa for free
golden
in Dubai, the
visa.
golden 10-year golden visa.
Yeah. That is a plus on the Dubai.
Yeah.
I think I think you said this already, Germany. We've also got Scotland.
Yeah, sorry, yeah.
We've also got
Scotland's still in the UK, right?
Yes. They haven't Brexited, but no. No, we do.
That-
Yeah, we've
that
got
was me.
Edinburgh. Look, the UK is tricky because honestly, we could probably find in most places we could find
Most
something.
major.
But yeah, most of the major cities. We've
Yeah.
got Scotland, Manchester.
We've got London,
London.
Birmingham.
Yeah,
What would you
London,
say
Birmingham,
about
Derby.
London?
We've got Broadoaks, which is just outside Cambridge.
Oh yeah, Nottingham.
Yeah, Nottingham. We've got Nottingham. So there's quite a bit. You know,
Yeah,
get hold of
there's
us,
a
we'll
lot.
have a chat. What does that look?
So I'm often asked by clients looking at property why we're not offering more property in London, right? What would you say to that? Beyond the exorbitant price.
Yeah, price point is a really big one. You know, we can source you some London property, but you know, typically what we find is, you know, that 100,000 that Lloyd talked about earlier, it's not a figure, it's just plucked out of the sky. We tend to find people have that you know, possibly have that amount or lower. And, you know, at 100,000, you're not going to get into the London property market as your 1/3.
So
No.
another zero to that number.
Yeah, you know, we might find somewhere for you, but really from our perspective, you know, you need considerably more money. It's not a bad location. Look, it's a very, I call it nostalgic buy. Globally, people just love London.
London,
They
yeah.
like London as a
Emotional.
city. It's an emotional purchase, and we aren't emotional about property purchasing. Having said that, though, we can find you London, or we could find you London commuter belt, which is also a London property. But if you're in the
Like
if
Ipswich,
you're in the price point where money is not really a factor, we do have the £1 million+ properties we can source for you. So London isn't off the table, but from an investing perspective, off plan, we prefer the other cities.
100%. Thank you, Adrian.
Cool.
I get asked this one quite a bit. What about the mortgage repayments? So I want to put it out there that all of our properties, we undergo heavy due diligence. We really do stress test a lot of these. So even on some of the sort of regular saving model properties, you know, where you're getting the sort of 7% yield net, we would expect that to cover your mortgage. And as we said, you know, it would be managed for you. You're not going to get a 3 a.m. call going, oh, the pipes have burst and you're in Kenya or you're in Ethiopia, and you're going, well, what am I supposed to do about this? So we really, really do help you find the one that's best for you. I think we are coming a bit close on time here. I don't know if either of you wanted to throw anything else out there.
No, I think it's we've covered everything that we need to cover. It's always easier, and as we said before, please reach out. Come and chat to us, reach out, have a meeting, because obviously we don't know your individual circumstance. This is just a general discussion around it, and everyone has their individual and our bespoke. So we do have to have a one-on-one with you to chat about it.
Absolutely.
So yeah, please reach out. I don't have anything else to add.
Okay. And just for your information, that is the HS2, the image that you're looking at right now. Those are, I think they're a few months old now, maybe 2 months old, but that's the progress on the HS2, the high-speed rail, that is connecting
London and Birmingham.
and Manchester and Derby. All right. Thank you all for joining us.
Thank you.
Thanks, Des. Yeah, thanks for hosting.
Thanks, gents.
Yeah.
And we
Look
see
forward to
you
the next one.
Yes, next Holborn Roundtable.
I wonder what the topic will be.
All
Stay tuned, find
right.
out.
Cheers, guys.
If I ever figure out how we're going to leave you. Okay, bye. Bye.